I'm Shay Russell from mining.com.au, and I'm coming to you from Resources Rising Stars on the Gold Coast. Standing next to me is one of my favourite people to talk to. I might have overused that this conference, but I'm going to use it again anyway. Hedley Widdup, the CEO of Lion Selection Group. Mate, how are you going?
I'm good, how are you?
Good, thank you.
I get the suspicion you've called someone else your favourite today.
I think I did.
As much as I appreciate you saying
I
it.
think I called Sean Russo my favourite, and he is.
I don't mind that, yeah.
Or maybe you two should fight it out to see who my favourite is.
Sean's, he's amongst my favourites as well, so.
Amongst, yeah, so that was a nice, more general term to make sure you didn't burn any
Collective,
bridges.
yep.
Unlike me, full of dynamite, off we go. All right, Hedley Widdup, CEO of Lion Selection Group. We are at a Junior Explorers conference, essentially. Now, you're coming from Lion Selection Group, which is essentially a fund manager, so you've got money to burn, and I know Lion Selection Group has a healthy balance sheet. Tell me, how are you looking to deploy that money, and is there anything here that tickles your fancy?
Well, we're not looking to burn it. We're looking to
It is the
invest
junior
and
exploration
deploy.
sector.
Yeah, it is. The group of companies here, they're a representative of part of the market which has been really downtrodden over the last 2 years or so. So some of them are down well more than 10, 20, 30%. They might have halved, they might have gone worse than that. So generally speaking, that's what we're looking for, is companies which come back a long way. But a lot of them progress their projects in that time as well. So we're looking for discount opportunities, and we're finding a lot of them as well. So there's a number here, but across the broader market, there's a hell of a lot, I think, to be investing in at the moment. I guess when you've seen something fall so heavily, your suspicion is, am I catching a falling knife? And my view is, they're quite close to the bottom of their price trajectory. So it might remain tough for them for a little while, but for now, I think the buying is good at the prices that they're at.
That's an excellent point that you've made, that some of these shares might have fallen 10 to 50% in their time, but yet these explorers are still making progress. So that tells me if we take the market noise away, these companies are getting down to business and doing what they should be doing. Are you finding that?
Yeah, definitely. I mean, one thing that none of these companies want to do is to appear dead, and they would appear dead by doing nothing, right?
Yep.
You can protect a company by trying to cut a lot of costs out, but if you're not progressing, there's no news. The world will think that you've ceased to be, and if you're not adding value, well, I guess it's a difficult situation for shareholders to want to have their money invested. They'll say, well, I'll take my money and put it somewhere else. So the lack of news, lack of progress is like a death bell to a lot of these companies. They'll try to avoid that at all costs.
Now, Lion Selection Group has recently diversified some of their interests. You took a stake in Venture Minerals, for example. Obviously, they've got a rare earth project out in WA. Tell me, what other sort of minerals or metals are on your radar right now?
Well, look, as far as commodities go, gold is a great place for us to look. Gold is incredibly easy compared to most other commodities to separate and sell. So in a risk perspective, most gold projects are lower risk than most other commodity projects. So we've always liked gold for that reason. We're looking at that. Base metals are a little bit of a tick up as far as risk goes on a commodity basis, but that's another place we'd love to have money. It's just a lot harder to find base metals projects, particularly in juniors. A lot of the better projects are inside of larger companies, so they're less investable on a project by project basis. But across the whole, let's call it critical material space, we're very open-minded to all the things which have, some of them have been market darlings in the past, and critical materials prices have fallen quite significantly in the past 2 years. So 2 years ago, when we started looking for new investments in this space, gold was where the best value was. Critical materials were right up there. They were quite expensive. That's reverted. So I think we can now start to diversify that into some of the things which, I think, the stories of the future, but they've got a lot cheaper. We would have been foolish to buy them 2 years ago.
And I saw this question's really for the retail investor, but jurisdiction. Now, I know Lion Selection Group isn't actually scared of jurisdiction risk. In fact, you've been willing to put money in the past where other companies won't go. How does a retail investor adopt that mindset? Because a lot of the times people think if it didn't come from WA, they don't put money in it.
Yeah, well, it's an interesting question because 2 years ago, we decided we've had enough of spicy jurisdictions. We're going to focus on Australia. We still have money in Mongolia. We still have money in Tunisia, Morocco, and Japan. And none of those are jurisdictions which I would class as being difficult or overly risky. But risk is a spectrum, and everybody is somewhere on the spectrum. You're not at one end or the other. The benefit of Australia is that you get exceptionally good rule of law. So if something commercially goes wrong, the rule of law is a great deterrent to people to try that on, and it's also a great support that if you need to resort on it, you should understand how it works. notwithstanding recent political decisions. I mean, that can muddy the waters in jurisdictions. What we've found in Australia is that politicians from time to time, they tend to be from the Labor Party more than the other side of politics, have brain farts and they make poor decisions that really affect investability as a country, and that's what's happened recently in New South Wales. So, let's hope that doesn't become a precedent for the future where politicians make decisions at the end of processes that destroy money which has been invested, thinking that you would be able to work through a process. Australia, by and large, great geology. There are great opportunities here, but it's supported by that very investable climate. The reason you go overseas, so to answer your question from a retail perspective, the reason you go overseas is to try and get access to better geology. 10 out of 10 deposits, large, high grade, rich, all of those things. But the compromise that you make is that you're going into jurisdictions where you might have a 1 out of 10 legal system that supports you. So, it's risk versus reward. And what we've decided is that we'd prefer to focus on a jurisdiction where you don't have to think about that jurisdiction risk.
So you mentioned probably one of the spiciest issues to happen in Australian mining recently, and that is the turning down of a tailings dam for Regis Resources. I've got to be honest, this is really unexpected for Australia. Do you have any thoughts on this?
Everywhere you go through an assessment process, the first thing that you do is you consult with government agencies and understand what the process is going to be. So what do I need to study? What do I need to assess in order to be able to get my licenses to operate? And sometimes that's a consultative process with bureaucrats who say X, Y, Z, tick, 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 you will be okay. In others, it's talk to the community, understand what their issues are, and work through those and see if there's a compromise that can be come to. Or, if there are unavoidable risks, you might need to take the decision that it's not going to be possible. You might be able to engineer your way around those, but that's not always possible either. So what happened in the Regis situation was they got to the end of a very long process where they invested time and effort going through a process which looked transparent, only to get to the end of it and have a surprise objection turn up which became a blocking issue. And I think what's been exposed in the media is that if that's on a heritage basis, this is a cow paddock essentially, which has been farmed for 150 years, and this evidence of it being a very sensitive area from a heritage perspective is not supported by the pinnacle Indigenous land use, group in the area, and it appears that there's little evidence for that. So it seems like there's a sideline splinter group which has brought up a very unusual piece of evidence. Now, I don't want to weigh in on exactly how appropriate that is, but to have a federal minister come in at the end of that and say, oh, well, sorry guys, but I've listened to someone that didn't appear in the process until right at the end. I understand that you've spent all your money, but all you have to do is put a tailings dam somewhere else, which is, I think that's a very naive thing for the minister to say. You can just move a major piece of infrastructure where you've had to go through 5 years of permitting to decide where it's going to go. She has a process that she's at the pinnacle of, and she's made a mockery of it. So I think that is where the tricky part is for me.
I was actually going to wrap up with a question, but you've made an excellent point, and it just goes to show the weakness of mining knowledge within government, both sides of government, but in this particular moment, Labor's made a very poor decision.
Yep.
How do we get better knowledge, mining knowledge, into government? Because there seems to be, as this one just happened, there seems to be the huge knowledge gap here.
Yep.
They stuffed up.
There's not too many politicians have worked in the industry, but I mean, has the Transport Minister ever driven a train? Has the Immigration Minister ever worked on the front line of immigration? No. I mean, there's a tremendous lack of experience in the world other than in politics. So that worries me across the board. But I think if you're going to run a department of anything as a professional manager, which is pretty much what those ministers are, I think you need to be consulting with people who have experience in the space, and not just relying on bureaucrats who are making it up as they go along, which might be what they're doing.
And my final question today is, look, I've asked this question of a lot of people today, and that is, over the next 4 months, what can we expect? Now, obviously, markets are a bit depressed at the moment. There's a lot of expectation that the rate cut is baked in for September, a lot of calls about the RBA to reduce rates, though I don't think they will. I know Lion Selection has their world-famous Lion clock. What are you looking for? This is an unfairly vague question, by the way, and it could take me down any slippery slide.
So the question is, in the short term,
what do you think is going to happen?
Well, look, I agree with you on interest rates. I think it's difficult to see particularly an aggressive adjustment of interest rates, because inflation is it's a sticky thing. You can't presume that inflation won't be sticky because by its very nature it tends to be. And in Australia, the situation looks like rates are here at the level that they're at for a little while longer. So my expectation would be that they stay, and that affects risk appetite in the market. I think through 2025, the expectation that rates could start to abate is a little bit firmer. And I think interest rates and risk appetite for small cap stocks are intrinsically linked. So you reduce interest rates, you probably bring back some investor appetite. So I think that's got a bit to do with it. But of course, interest rates also impinge on what's going on in the economy. And the economy is the big question. So, could an economic event impinge on equity markets in a sudden and negative fashion? Well, that's always a possibility. You never expect it, and when it happens, it's never exactly what you expected, even if you thought it was risky. So you can't rule that out at the moment. Parts of the market are quite highly valued, which introduces that risk. But from the perspective of mining, commodities and risk appetite, I see that creeping back through 2025.
All right, so a quiet few months to go just yet. Listen, Hedley, thank you so much for being here. My first or second favourite person to talk to at these things.
Thank you for having me, Shay. It's been
My
fantastic
pleasure.
to talk to you.